Hey, everybody. Welcome to the Practical Founders Podcast, where every week we hear an amazing story from a serious founder who built a valuable software company and did it without big funding. I'm your host, Greg Head, and this week my guest is Dave Yuan, the founder of Tidemark Capital. They're a serious growth equity investment firm investing in vertical SaaS software companies. And it's a growth equity investor, not the classic grow at all costs venture capital investor. So we're talking about a practical funder today who invests in serious vertical SaaS companies that are capable of growing quite large. Dave has invested in some big name companies that we all recognize, like Toast and Clio and SiteMinder, that have grown very big, and some of them to billion-dollar revenue companies. So we're talking about the core levers that vertical SaaS founders can use to think about their growth game, growing their market, growing their share of wallet, and expanding from there. There's kind of a set of frameworks that he talks about at tidemarkcap.com, their website. He's very serious about building a community of vertical SaaS founders and benchmarking what's happening in vertical SaaS and communicating knowledge. He even had the Vertical SaaS VSaaS Collective live conference last year that I spoke at. And he's very serious about the big growth game for vertical SaaS software companies. It's a great discussion. We also talk about how AI is both an opportunity and a threat for vertical SaaS players, depending on how you're playing it. So it's a great episode. Dave is a really savvy guy, and I really appreciate him coming on the podcast to share his knowledge. Hey, Dave, welcome to the Practical Founders Podcast.
Hey, Greg. Awesome to be on.
Yeah, I know you are a busy guy. Thanks for making time. You're right there in the heart of Silicon Valley as an investor and focused on the vertical world. Last month in Silicon Valley, the hot news was DeepSeek and whatever turns we saw with all the AI LLMs and so forth. What's news this week that's affecting your world in Silicon Valley?
Yeah, well, DeepSeek is a big thing, and
Mm,
I think the interesting aspect of DeepSeek is it's a real new entrant at the base model layer, and
yeah,
I think that means great things for a lot of folks on this podcast and our portfolio as
yeah,
it relates to
yeah.
applications. But you're right. The news cycle does turn over, and I think the big news of this month and probably for the next, I don't know, call it couple quarters, if not a couple years, is tariffs. And tariffs are resetting input pricing, they're resetting export pricing. A number of industries are having to refactor how they build products, how they source goods, and the other aspect is there's just a overall level of uncertainty in terms of are they going to stick at what level, so on and so
You
forth. So
think we love that uncertainty that's happening both ways. Yeah, it's just really amazing. And tariffs don't affect software companies per se, right? It's not like there's a software tariff on software, Salesforce or whatever. Is that
not
right?
yet, although
Not yet.
a
Okay,
lot,
right.
a
Yeah,
lot
don't we don't not to say too many bad things there. But tariffs are important to you because at Tidemark, your fund at tidemarkcap.com for people, you're an investor, you're focused on vertical companies, industry focused companies. So just like COVID, some industries are getting clobbered by the question marks of tariffs and others are, outside of it, at least for now.
That's right. And generally, as software investors, we've kind of kept our head down on general macroeconomic forces because overall, I think a lot of the folks on this podcast as well, they benefit from just a secular adoption of software.
Yeah.
That being said, some of our companies are relatively large and they serve a pretty good chunk of the industries. And if the industries are getting hurt, if their labor costs are going up, if their input costs are going up, then it is something that we have to think about. Now, they can play out in a bunch of different ways. Actually, the deal that we're trying to close today actually is in a
Ah.
great corporate travel company that
Hmm.
helps corporations really control and manage their travel costs, which is oftentimes I don't know, number two, number three expensive line item. So there can be positive aspects to that, but nonetheless, I mean, we support Main Street businesses as investor in software companies, and if the Main Street gets hurt, then our software companies likewise need to think through that and oftentimes suffer.
Yeah. Well, I appreciate you being on the podcast. You and I have been talking for a couple of years. I was at your Tidemark Vertical SaaS VSaaS Collective live event in San Francisco last October. A great event, 150 vertical SaaS founders and great speakers. I spoke downstairs to the folks getting to 10 million in ARR, and upstairs you had some great speakers from companies you've worked with in the past and continue to work with that are heading towards $1 billion. So there was, I don't know, what was it, getting from a million ARR to $1 billion, upstairs, which you don't hear very often with Toast. And you also had Procore in the, I guess that's the construction space, and
That's right.
ServiceTitan talking about, super scaling these vertical software companies. And I met dozens of great founders, had a couple of them on my podcast already from that event. So I appreciate you being on the podcast here to give an update of what's going on and learn more about how you think about verticals. Dave, is it fair to just characterize you as you're a Silicon Valley venture investor focused on like large scale vertical category killing gorillas? Is that what you're doing? Like Toast and Service Titan and the rest? Or, you call yourself growth equity. And
Yeah,
and you've
yeah,
said you're pretty practical, and I can see
yeah,
that. But like,
yeah.
give us a line on what it's like up there in the big leagues.
Well, first of all, Greg, the fact that you had this great breakout session downstairs had nothing to do about the scales. We very much appreciate the community that we were able to bring together at Live, and including yourself and all your great practical founders. I think it's hard to understand us, right? Because we have invested in 14 companies that have grown over 100 in ARR, seven that have grown over 500, three approaching a billion, and then
Yeah.
I'm still on the board of a company that's over a billion. And so some of these companies do grow into very large scale, and they happen to be in very large markets. That being said, we kind of don't care how big the market is to some extent, right? We care about a company that's building a category-leading product that has a unique distribution model that becomes the leader in the space, that has a strong business model. Now,
Hmm.
if it's a smaller market, we may take more of a growth equity approach where it's much more capital efficient and the use of proceeds are used in different ways. It might be M&A, it might be secondary. In bigger markets, it does require a little bit more primary capital. So the way we engage with companies may be different, but hopefully these companies that are starting out with 5, 6, 7 million ARR scale to hundreds of millions, if not billions of ARR, and we all make a bunch of money. But we can likewise make a great return going from 5, 6, 7 million ARR to 30, 40 million and winning a smaller category. And we love working with those businesses as well.
That's great. So you've got two tiers that you're playing with. One is the growth equity tier for kind of practical founders. They're getting that my practical founders are familiar with and getting calls about. They're vertical, getting to 3, 5, 10 million ARR, and they're getting knocked on the door by the traditional smaller fund growth equities and saying, we'll invest 10 or 20 million, and some secondary, some primary, grow 3 to 5x in 3 to 5 years, and start the private equity handoffs with a lot of support. Sometimes they have a lot of operating help and support. That's one of the flavors that you do, but really for the category leaders. And does that mean they're going to be a core system in their vertical, either the front office or back office?
Yeah, I love what you're doing here, Greg, which is disaggregating sort of the company scale and the style of investing with the product strategy. And
Yeah.
and so from our perspective, again, we're agnostic in terms of TAM size within reason, but agnostic. And we kind of don't care who the shareholders are. We don't care if they're fancy firms. Actually, in fact, we like the folks on this call, the practical founders that haven't raised outside money or raised very
Yeah.
little outside money because they've shown scrappiness and they've shown capital efficiency and great product market fit. And so we're pretty agnostic on that front. In terms of product strategy, where we're looking for companies that emerge as category leaders, we have this concept called a control point. And we've written a lot
Yeah.
about this and happy to send some essays your way. But this idea of a control point is, think of it as the most important system. It's where it has our terms as data gravity, as it stores the most important data, maybe sometimes the widest set of data. It has the highest workflow gravity. It's the most important workflow. It's how you build your product as a merchant. It's how you serve your customers. It has the most engagement. We call this the control point because it's the last system that gets turned off if a
Yeah.
before a merchant goes bankrupt. And on the flip side, if you have these elements of a control point, then it allows you to offer multiple products. Most of the time, your customers want fewer vendors, and if you're the control point, you're the vendor that they look to, and your
Hmm.
products work better together. And so this idea of control point allows you to be the multi-product platform for the space, and oftentimes a category leader. In every vertical, there tends to be one control point at the front office and one control point at the back office, and sometimes you get both in
Hmm.
the case of something like a practice management system. And that
Yeah.
allows you to really own the category or certainly the merchant from a mindset. And ultimately, I think it does allow you to own the category.
And yeah, that's where I'm bringing you on here. You and your team at Tidemark have been writing about and kind of sharing your frameworks. I wouldn't say playbooks because you say it depends, as much as I do. But your frameworks for thinking about this, and and you call it the vertical SaaS. What do you call it?
The Vertical SaaS Knowledge Project. We
The
got to get a
vertical,
little bit
yeah,
better
you
at
call it the
branding.
vertical SaaS knowledge project up on your website, tidemarkcap.com. And there's great content there that I think is putting a very specific and practical description of kind of what's been around for years. We've been talking about core systems and systems of record and get your market share before share of wallet, right? In verticals, that's the classic old playbook. But you're getting very specific about these, and whether you're a 5 million or 50 million or 500 million, right? These, if you're in that core system control point, there's a sequence of events that happens that you've described really well. I recommend everybody go and check out the Vertical SaaS Knowledge Project. So, is that the first thing? Is from your perspective, and where it gets really exciting, whether it goes to a billion or not, is being a core system on the front or back office that enables this multiplying, this virtuous cycle to expand
Yeah.
and extend.
Yeah, I love how you're framing this, Greg. So first of all, it's not a playbook; it's a strategy framework because we're not playbook investors. We're not going to try and buy your business and tell you what to do. We're there to support
Yeah.
your strategy. So that's point number one. Point number two is that's 100% right. We are looking for control points, and if you're not a control point, we also have frameworks of how you can become a control point. So some of the language you use is integrate and surround. So oftentimes the
Mhm.
control point might be a legacy system of record. Well, if you integrate with them, you become the system of engagement. You can ultimately surround them. And so we've
Mm.
had companies like SiteMinder do that very successfully. And so you don't have to start out as the core system of record, right?
Mhm.
Everybody on this podcast and the companies we invest in start as a challenger initially, right? And so how do you go compete with that system of record? You eventually surround it and become the control point over time. And so these are the types of frameworks we're trying to provide to founders, whether they've taken financing or not, to think about these multi-year strategy decisions around what's the next product I provide or what's the next company that I acquire. Now,
Yeah.
we've gone further with that in two ways. The first is we started out with a strategy framework, and then we realized, well, gosh, these are great thoughts, but we really ought to support companies in our ecosystem with how to implement these frameworks. And so we started something called Collective. And Collective is the idea is we're bringing our community, Tidemark fellows, to lead sessions with 20 to 30 non-competitive CEOs to really learn the nuances how to implement these strategies,
Yeah.
how to attach payments, how to launch a capital or lending product, how to think about payroll. Um, the third piece that we're adding to this, which Greg, you've been a great supporter of, is our benchmarking product, where
Yeah.
it's great to have theory, it's great to understand how to do these things. We want real data from other vertical SaaS CEOs and founders around what should I expect in terms of attach rate, in terms of monetization of these second and third products, so I can start to make decisions. How to make decisions not just generically, but specific to the product I serve. So if I sell
Yeah.
point of sale, well, the obvious next product is payments. That might be different if it's practice management. So
Yeah.
that gives you a texture of how we're trying to
Yeah.
serve the community.
Yeah. And I love the discussions I had with you and other founders at the VSaaS Collective Live event, and how you talk about things. It's not a simple, spray and pray, throw money at it problem. It's always about three levels down to find where the real leverage is and then sequence efficiently on top of that. I guess you know, that's most VCs don't go down that many levels to the first principles and and build back up in a kind of strategic way. It's actually more practical and serious. Is that kind of in contrast to like I don't know, the current VC model? Obviously, they're smart and they're putting big chunks of money together. But what makes you more practical than a Silicon Valley VC who's investing these kind of checks, maybe in a vertical as well?
Well, look, I think there's some great VCs, and I'm not going to besmirch the entire category, but I
Yeah.
think part of the unique value proposition of working with the growth equity investors, if a firm has seen companies that have scaled, and so you realize that, and everybody on this podcast realizes, 0 to 1 is its own journey,
Yeah.
1 to 5, 5 to 10, and each of these stages is like a chapter in the book. And so if you haven't read ahead, if you hadn't had experience, you lose some of the nuance. So
Yeah.
that's part of it. So some of the early stage investors are really great specialists at getting from 0 to 1, 1 to 5, and then
Uh,
they functionally sort of step back, and these are their winners, and they
right.
and they're in the money, and they're at that point they're kind of cheerleaders, to be honest.
Yeah.
And that's
Uh-huh.
again that's not all. There's certainly
Hmm.
some great VCs out there, and it sort of it goes to their business model, right? They're planting 20 seeds and hoping one flowers to pay for
Yeah.
to get that 50x to pay for the rest of the seeds that didn't work out. And so it tends to be much more narrative based and much more conceptual, and they're very good at that. But then you point out, as you're building one of these things and you're scaling it, you're going through the hard yards of growing the company, the narrative's great, but you got to get down a couple levels. And so we pride ourselves of trying to go deeper, and then more importantly, bring world-class operators that get even deeper with our companies.
And are those operators on your team? There are a lot of growth equity investors have an operating platform for those scale phases to help you with pricing and hiring and execs and operations and metrics and all that stuff. Do you have an operations team, or do you have your big network? I know you got a big
Yeah.
network.
Yeah, it's somewhere in between. So
Yeah.
what we're trying to create is somewhere in between, which is um we don't want to drop in and parachute a team and say like, hey, we know the answer. You're going to follow our playbook. You're going to go A, B, C, and D, right? And I think some of the issues with that is it's kind of heavy-handed with a CEO and management team
Private
that's
equity-ish, we would say.
perhaps, yeah.
Mhm.
And these are great founders that we're working with, and they have a lot of pride, and they've done a lot of things well. And so it's much more of a consultative engagement. The second piece is when you bring people on your staff, they do tend to atrophy, right? They aren't working at the cutting edge. And so what we're trying to do is bring in more consultative people
I
that
see.
are operating in real time at the frontier.
Yeah.
People who are running sales at Toast, right? Which, in my opinion, is one of the most analytical and most data driven and most scaled go to market. People running onboarding at HubSpot. These people running
Yeah.
capital at Square, and so we're trying to create this sort of hybrid engagement model. I think the second piece of this, and you've been a big part of this, Greg, is and this is what you're doing with your practical founders community is a lot of the things that we're trying to do are the cutting edge, and so there isn't a playbook. And so what we try and do is actually build a community to learn from each other. So
Yeah.
these collective live sessions are 20 to 30 CEOs that are non-competitive,
Yeah.
so they can really share. It's led by a subject matter expert along the lines that I just described, but
Yeah.
it's really like learning from each other. And so those are the couple of different ways that we engage. Of course, if you want to go deep on, pricing, financial metrics, product management strategy, we have people that can do a more deep engagement and a little bit more directive, but we're trying to engage with companies in a variety of different ways.
Well, that cutting edge, right? Silicon Valley, the hive, if a playbook is written in a book, it's probably 2 years ago in Silicon Valley because everybody's moving forward and talking to each other. But vertical founders were never really in that kind of that cycle time that was happening in real time in Silicon Valley. I've been part of that, in the old days. because they're in their industries, and the industries are like 10 years behind or 5 years behind, in tech. And it's really hard to commiserate across industries. And, your connections and your events, like all of the founders I ask, have you ever been to a vertical SaaS event ever before at your event? And nobody ever had. So I really appreciate you kind of making those connections and bringing the frontier to the next wave of entrepreneurs who are heads down in their business. Vertical tends to be not as cool and not as connected as many of the horizontal plays that get the big funding and the cool kids,
Yeah.
right?
Yeah. Look, for a long period of time, as you know, vertical and SMB software companies are underestimated.
Yeah,
Market's too small, the customers churn too much. You can't build out an economic sales force. And I think what a lot of the people on this podcast have done, and some of the great entrepreneurs we've worked with, is figured it out, right? They figured out how to
yeah.
use multi-product, grow the TAM, help with the retention rates, provide bigger ARPUs to drive go to market. And so I think for a large period of time before this big AI rush,
Mm-hmm.
venture investors really ignored this area. We always love this space because we do believe these end markets really need digitalization, and it can really improve the customer experience. It can really improve the merchant and these entrepreneurs that are working, I don't know, 18 hours a day in their restaurant, in their auto body repair shop. Give them software to really get away from their work, manage it remotely,
Mm-hmm.
just get more leverage on their time. So we always love these businesses from a mission standpoint, and then the business models can be actually some of the best on the planet. Now, it's interesting. Like, one of the reasons why I've always really loved our conversations, Greg, is like we do see a lot being in the valley, but we invest outside the valley,
Yeah.
primarily outside the valley. And these industry end markets really are driven more by people who really understand their customers. They understand why a
Yeah.
restaurant is different than a salon, and why restaurant owners may want a software that's bespoke to them. And those are practical considerations. Those are practical founders.
Mm-hmm.
Back to the community you've created. So I do think vertical is the intersection of the best of both, and we're excited to invest in the space.
Well, there are some verticals that have a lot of big company, the auto industry or something like that, but they don't tend to have vertical software for the big enterprise ones. The SAP just makes, verticalized platforms, and same with Salesforce. But most of the companies you're investing in that have big industry markets are SMB small business markets, lawyers, dentists, restaurants, which is absolutely huge, contractors, and so forth. So, is that part of your thesis too, that SMB is notoriously difficult and complex, and you add the vertical thing to it, and it just makes it an interesting puzzle? I've always played in those kind of the SMB world, which was most venture investors in Silicon Valley didn't get it.
Yeah, yeah, for sure. I think there's a lot to that, Greg, and I think many of our most successful vertical platforms do sell to SMBs. The cool thing about it, though, is more and more vertical software applications are selling to mid-market enterprise, either directly, or what
Oh,
happens is you sell to some level of the value chain that is SMB, but then you start selling to other
right.
constituents, whether distributors or OEMs or big
Hmm.
peers like insurance companies or healthcare plans that are, the biggest of enterprises. And
Yeah.
so I think the cool thing about this market is it's changing so much. This isn't a staid playbook. There's a lot happening, which is exactly why we don't give playbooks. We give frameworks to try and think through things.
Yeah. Well, let's
One,
talk about your framework again, just so we
yeah,
can get through it here from your vertical SaaS knowledge project here. There's the theory of getting market share first, the locations, the rooftops, or whatever. Get as many of those possible, market share first, and then adding to that with multiple products, the classic adding payments into your practice management type system,
yeah,
and adding other products and increasing ARPU and expanding the market even more. And then, keep going from there. So these, what people imagine as a very small TAM and a vertical available market, all of a sudden gets multiplied, right? You can get a biggest share of wallet and start expanding past your core customers. Why
yeah.
don't you just take us through your core framework there? And because I see it in almost every control point, you know, system of record type company.
Yeah, for sure. So I think you said it well, Greg. You first start out, hopefully you're in the control point. Hopefully you offer that product, whether it's practice management, point of sale, a property management system, whatever it is. If not, then our perspective is you want to start building a strategy to become a control point, whether it's integrated surround, change the consumer experience. There's a bunch of different playbooks that we could walk through at
Hmm.
some other point. But if you're the control point, then our perspective is go get locations because you have an unfair right to cross sell their products. And so rather than, and it's not
Land grab, or like go get them first, with a great
100%.
product proposition or a great go to market,
Yeah.
tech
Yeah, it's
tactic.
it's it's not a binary choice. You can do both, but like if it's working, go feed the beast, right? Go
Hmm.
get as many locations as you can because you have an unfair right. You'll be able to sell multiple products over time. Once you've done that, or as you're doing that, you need to start thinking about two things in concert. The first is as you start pushing through your TAM, and if you still want to grow, I suspect most owners and founders want to continue to grow their businesses. You need to think about what's the next horizon. The second piece is, as you described, Greg, is if you're the control point, you have an unfair right to sell multi products, if not all the products. And so you think about the sequences of how you offer those products. And those sequences have to do with execution risk, right? Can you build the product? Can you sell the product? Is it aligned to your end core customer base? It's monetization. And monetization is pretty layered. It's how likely are you going to be able to attach? What's the price point? And the third piece is, has it increased your gravity? Has it increased your data gravity? Has it increased your workflow gravity?
Stickiness, you would say.
Stickiness and retention rate. And so
Mm.
that those are the data points that we're building out with the benchmarking situation. But those
Hmm.
two pieces, expanding ARPU and the next S curve, are highly interrelated because whether you raise outside money or you self fund it, ultimately you need some dollars to go invest into that next S curve. And that's why a lot of software companies tend to atrophy is they sell a great widget, they're not able to increase ARPU, and they run out of funding to go win that next
Oh,
market. And so that's why primary financing
yeah,
from us or self-financing through margins and ARPU can help you get to the next market. The cool part, were you about to jump in? I was about to keep
no,
going.
no, I'm totally
Yeah,
with you. Keep going.
I'm super passionate about this stuff, so
Yeah, yeah.
but the next market can be a number of different things. It could be a different adjacency. So if you're in legal, you can go into another professional service, and we can talk about the some of the considerations associated with that. The exciting part, though, is it can also be going to another stakeholder. So if you're selling to a specific merchant, you can sell that merchant's customer. You can sell to that merchant's supplier. You can sell to that merchant's employee. So this is something we call extending through the value chain.
Hmm.
And that's actually super powerful because back to your opening question, you go from selling to one market to actually selling to a downstream market where you might actually have an unfair right. If you sell to a buyer, well, then you have a lot of leverage selling to that buyer supplier. And that opens up TAM. It opens up new opportunity in a way that you can expand really capital efficiently. Again, if you're self-finance or raise third-party money. So we're starting to see this over and over again. I think initially when I started writing about this about 5 years ago, the existence proof of companies that were able to sell into their customer
Mm.
supplier, the customer's consumer, customer employees was really, really small. There are very few companies that have done. Now we're starting to see it happen over and over again, and it's still not normal, but it is becoming much more common.
Yeah, the normal, let's say, sequence of events is I create a product. For the industry I know, at the core system, everybody's dealing with the fringe and it's not solving the core problem. I've got a new way to do it. I start to get customers on the core system there. And through extending your product and additions and raising prices and eventually products, you create a lifetime value of the customer, which means you can fund more
That's right.
from your revenues to go acquire a customer, right? Which means you can expand to the next rung out. Is that what you mean by the S curve, right? Is keep without having to raise another monster round, the growth round or the next growth round, right? Is that what
Yeah,
you're talking about?
100%. It's how do you think as your core business starts to decelerate, right? You start to get higher and higher market share, and you start to sell against less and less attractive customers in your segment.
Yeah.
You really need to get profits and margin out of that to fund the next S curve.
There you go.
very few technology companies actually have multiple S curves. That's why you
Mm.
don't see companies that have built big enduring businesses for multiple decades. That also creates a lot of opportunity for some startups to go attack some of the incumbents. But I think this idea is really important. That's why I do, maybe to plug growth equity investors again, is
Hmm.
you think a lot about product market fit in terms of getting that first S curve, but you also have to be thinking ahead in terms of how do I fund my next business? And
Yeah.
there's a lot of built-in institutional resistance around doing that. We can talk through that, but it's a
Meaning
whole,
the next phase of your business, either the new product stack or
yeah.
starting at physical therapist and going sideways to chiropractic, right? The next rung of your circle, that kind of thing.
Yeah, think of it as simple as like you got your core business, business unit one, right? And then you got new business, business unit two. Business unit one is the big business. They kind of have
Yeah.
all the political capital. They make all the money.
Yeah.
They generate the
Yeah.
most revenue. As business unit one slows down, you have to tell the head of that business unit, hey, slow down. You can't build new product, or you got to slow your product development. You got to slow your sales hiring in order to generate margin for business unit two. Business unit two is the little brother or the little
Hmm.
sister. They're
Yeah.
small. They burn a ton of money. And business unit one, the head's like, hey, what gives? I'm the one who's making it happen here,
Yeah.
and
Uh-huh.
so
Classic.
it's hard. It's hard whether you're venture funded or bootstrapped. It's this understanding of how to manage through various different phases of growth, and that's different.
Yeah. Practical founders, the little guys, the bootstrappers use the word parlay, right? They get their service business up and then they take profits from that to get the product up and turn something is. But you're kind of talking about in vertical is, becoming that category killer gorilla, right? With these consecutive, let's say, expansions. And they don't, these take years and years, sometimes decades
Yeah.
to build on. But let's talk about one or two of the companies you've worked with, maybe Toast in the restaurant point of sale business, and now surrounding it, or and other ones. And you could see they started with something very specific that
Yeah.
went fast, and they quickly added on. I don't know. Was it a product expansion? Did they get leverage from their product line expansion, or was it their go-to-market leverage that was the biggest? Toast is more than $1 billion in revenue now, but and picking up steam.
Yeah, and to be clear, I'm still on the board there. It's a publicly traded
Okay,
company.
yeah,
I'm
that's right. Yeah,
talking
being
at a high level, but it's a beautiful company. At least from my perspective, not investment advice, it's a beautiful company, and I think it's both. I think what's really interesting about Toast, and they've talked about most of this or all this in their earnings releases, but it's both go to market and product. On the product side, as we described, they started out with point of sale. They actually embedded payments, so they made it mandatory, and that made sense because
from the
payment,
beginning.
yeah, from the beginning,
Yeah,
payments and point of sale software work better together. It's a better
yeah,
consumer
hmm,
experience. The restaurants actually pay less money if it's embedded, and they get a lot more data, and it's a better experience. They've very steadily marched on from that initial starting point to moving more to the back office in terms of supplier and accounting, employee
hmm,
and payroll, shift scheduling, moving back, sort of back
hmm,
office, so to speak. They've also moved front office in terms of online ordering and loyalty. And so they've taken this great control point and really expanded the product. Now, from a go-to-market standpoint, likewise,
hmm,
Amon and JV are some of the smartest people I know in terms of how to really instrument a go-to-market strategy and go-to-market operations. And they describe in a lot of their earnings releases around these flywheel markets where they get deep in a market, they get to a certain level of penetration, and actually things get easier as they build a local network effect. And so
yes, hmm,
they were one of the first folks that I know of that really understood that dynamic, really planned around it, and really drive their business through it. So that gives you a sense of Toast. Happy to talk about other examples as well.
yeah. Well, what other frameworks are you talking about? I know you call it win. Get your
Yeah,
market share, expand and extend across
yeah.
the value chain, and what other frameworks are you talking about? In your knowledge project that would be useful for practical founders to think about.
Yeah, I'll give you two examples. The first is this idea of a supplier extension. And so take
Mm,
another company that I was on the board of for many years and actually am no longer, so I can maybe speak with a little less. concern here is a company called CCC, and this is a company that was built over decades. I think you made a really great point, which is building a great company takes a lot of time and
Yeah.
requires patience and the building of trust. But they start out by selling claims management to the auto insurers, and they realized the same estimation software that works for auto insurers really ought to help auto body repair shops in terms of writing their estimates for repairs, because you kind of want to know that your estimate aligns to the payer, right?
Yeah.
And they used that as a wedge, and they slowly built out this great operating system for auto body repair shops. If you were to look at just their auto body repair shop business, it's probably one of the best vertical SaaS companies on the planet. They go from front office estimates all the way to, you know, running the operations. How's this car fixed? Which bay is it fixed in? Which technician? And then they went even further down one level to an online parts marketplace, because an auto body repair shop business is throughput. It's people and parts. And so as you're repairing the car, you need to maybe pre-order the parts. And so it's a natural entree to selling to the parts supplier. And so we think of that as one of the most poignant versions of a supplier extension. And so really, really love what Kitesh has built over there.
Are marketplaces very common? Because at some point, yeah, we are kind of up against, you got your customer base, and the other side of the wall is their
Yeah.
customers or their vendors and so forth. Do marketplaces, I have a couple founders that I work with have marketplaces that intermediate and help them leap over to the other side. Is that a very common approach?
In the US, it's not, because I
Mm,
think because the end markets are quite large, or maybe that's the wrong causal factor, but
yeah.
it's not that common. In Europe and Australia, it's actually much more common, and it comes
Mm,
in two flavors. In Australia, a lot of times vertical SaaS has actually started out as a marketplace, which is, hey, here's a marketplace where you can go find a salon, and then they go vertically integrate to the salons by providing booking, maybe some CRM software, maybe
yeah.
some website software. So you start marketplace, and then you go into software, and you kind of go back and forth, because the most important thing you can provide a customer is demand, and so that marketplace
Yes,
works.
yes. Here's a
And
customer.
a marketplace needs supply density, which is the salons in this case, to build it out. So it's a really nice dynamic. And I think it can happen in sort of smaller end markets where you can get to a certain level of market share and liquidity more quickly. In Australia, what we've seen is that for different reasons, you have these marketplaces that are the number one player is like 60% market share. The number two is 30%. And then there really isn't a 3 and 4 because the markets aren't big
Yeah.
enough. Like, no one's going to fund that. It's really hard to compete with the
Yeah.
guys that have a network effect. Now they're worried about overseas competition, like the US players coming in and dropping prices just to get penetration. So what they do is they vertically integrate into the suppliers
Ah,
and provide like the inventory systems.
we need a
Uh,
bigger moat.
Need a bigger moat, keep the US guys out. And so, and then, China and Brazil is a whole nother story, which is a much more of a greenfield market where
Yeah.
you can start building it out much faster and get to scale more quickly. So, anyway, we're definitely seeing that, Greg, but it's happening in different geographies, either because their end markets are smaller, there's a competitive driver, or they just happen to be really early markets, and you can, like Alibaba got to basically build out, the marketplace,
Yes.
their logistics system, everything, their payment system, all in one. So they just happen to be earlier in the market evolution.
Yeah. Are you investing outside of North America? And do these vertical industry frameworks and dynamics work about the same?
Yeah, I think these frameworks rhyme, they don't repeat. And that's the cool part, right?
Oh,
There's a
yeah.
lot, there's
Hmm.
probably like 60-70% that are common, and then
Yeah.
just like every vertical is different, every geo is a little different.
Yeah.
And so what we've seen is we've had a lot of readers overseas. We have a big following in Europe. We have a big following in Australia, New Zealand. We have a big following in LATAM. And so we get a bunch of inbound deal flow. We have invested outside the US. I did that when I was at my prior fund, and
Yeah.
we're about to close another deal outside the US. And I think the cool part is some of these geographies are really early. They're really early.
Yes.
They're kind of 10 years behind in terms of software
Yes.
adoption.
Mhm.
And so, to your point, a lot of these playbooks do rhyme, and you have a lot of pattern recognition. You can get to the answer much more quickly. And there's some great businesses being built.
Yeah. So the great businesses that you're investing in, what is your end game? You raise money from limited partners, your investors, to go
Yeah.
invest it and pay them back. Are these kinds of companies that grow big and IPO like Toast and become successful public companies? Is that like the old VC model? Is that how you're doing it? The little growth equity guys say someday we'll sell it to private equity, which
Yeah.
of course is buying a majority of software companies these days. But
Yeah.
what are typical outcomes that you imagine in the future should they hold? IPO really isn't a viable strategy these days, but what kind of exits have to happen in your world?
Yeah. We try and take a founder's mindset, which is build a great company, have great products, have great distribution, grow the financial profile. All the other stuff takes care of itself. I've had roughly half of
Hmm.
my companies go public, half get bought by a strategic or private equity. You can
Hmm.
recap it, you can go forever, you can hold it for a long period of time.
Yeah.
Our business model is what you described, right? We take on money, we invest it, we hope to generate a return. I've been pretty intentional with the LPs I've chosen and how I communicate with them that we want to make long-term bets because the easiest way to making money is to get into great business. You help them compound for many, many years.
Yeah. Compounding. Right.
It's the easiest and least risky way of making money. And so if we're in a good one, and we believe we're in a couple good ones right now, or many good ones right now, we just want to let them run.
Yeah.
And so that's kind of how we think about it. I know it's not a satisfying answer, but we're not. An IPO is just a financing event, and it's a
Yeah. Yeah.
pretty
Yeah.
expensive one. So we're not
Well, it
seeing.
helps for the finance guys that raise money and
Yeah,
can take money off the table and so forth. So let's talk about the change in the game and some of the risks that are out there. AI is coming not just to platforms and to it's coming into vertical spaces.
yeah,
And most of the vertical founders I know in my peer groups that I work with and talk to,
yeah,
whether they're a core system or an add-on for a core system, they're saying AI isn't a big thing yet. We're experimenting with it. We're using
yeah,
it inside our business. We're kind of playing with some products, but we're not like throwing it all out and going
yeah,
AI first. And
yeah,
they don't imagine an immediate disruption from AI first, companies in their space.
yeah,
But do you see it any differently? And because you think out a bunch of years, there's AI is going to come to verticals
yeah.
and get work done, not just automate the workers.
Yeah, and it has. It has. I
Mm.
think for a founder that is well informed, that is progressive, that is leaning into it, I think AI is an opportunity. Those that aren't, it's a big threat. The threat comes in three ways.
Hmm.
First, there's a ton of interest in AI. So in one end market, we saw 30% of the practitioners in market today for a new AI solution
From buyers in a
from
vertical
buyers.
market. So these sleepy verticals, right, are waking up and saying, we need to find advantage, and
Yeah.
maybe the advantage is AI. Okay.
So great value proposition. A lot of people in market. There's a ton of money being pushed in, some of which you can benefit from, right? All
Yeah.
these
Yeah.
hundreds of billions that are being put into OpenAI and the
Exactly.
other LMs. God bless. You can
Yeah.
use those capabilities probably on the cheap to improve your products. The third is that the capabilities are changing dramatically, right? So that's why you have to pay attention. Now, let me talk about the opportunity and also kind of more tangibly the threat. The opportunity is if you're the control point, you have an unfair right to sell multi-products to your customer,
Yeah.
including AI applications. And
Yes.
so what we've seen in our portfolio is AI's actually driven a lot of interest, a lot of sales cycles, and lots of engagement. And again, using the infrastructure of these very heavily funded third parties that are coming out with new models every day, like man, with your workflow gravity, with your data gravity, you can create a great AI experience, right? So,
Hmm.
so I do think it's a big opportunity. On the flip side, the thing that you should watch out is this classic integrate and surround strategy, and it goes something like this, which is you have 30 to 40% of practitioners, the users out in market looking for, I don't know, an AI transcription tool. They start using it, it makes their life easier, saves them
Hmm.
2 hours a day. Well, they're going to be super loyal to it. All of a sudden, they are going to force you as the system of record and the system of engagement to integrate into give read write access. Now, these AI companies aren't stopping at one product, they're going
Yeah. Yeah.
multi-product, which is you go from transcription, for example, to a system of action. So I took all these notes to what I need to do to triggering actions. And guess what? The AI tool is now an agent. It's a user in your platform and
Hmm.
triggering off your workflows and your data. Pretty soon you start, it's the integrate and surround, right?
Yeah.
And all of a sudden you're the system of record in the back closet, right? You're kind of SAP now, where
Hmm.
your users and your customers are all in the AI's UI every day. And as a result, they're more loyal. They get more revenue from those users, and they have won the multi-product opportunity. So that's the threat, and that's why we feel like we're kind of a bit of an advocate for AI within our own portfolio. I think that's why there can be. This is why I do think practical founders should look for sources of knowledge and insight around these topics because the market is moving very, very quickly. I think it's a big opportunity, but it also can be, it can actually change the dynamic in your market. It can be a big threat.
I'm not asking you to speak specifically, but you got a deal you're trying to close. Congratulations. You're getting close. Does that have a material AI story or an AI first or, or not so much, an AI potential?
So the way we look at things is really products first, right? So what's the job we're trying to do? If you use software, you use robotic process automation, if you use AI, if you use machine learning, kind of doesn't matter.
Yeah.
And so this one, we do think that there's a big AI opportunity to it, but
Okay.
at the end of the day, we think about what's the value proposition they're offering their end customer, and that value proposition is awesome. It's one of the better value props that I've uncovered recently. So the fact that it's delivered through AI, through software, through data is partially relevant. But yeah, there is an AI component to it, and that's why I think they're able to serve their customers better.
Are there going to be potential disruptions, the horizontal players moving faster with their software and kind of jumping to the other side and offering true verticals, multi verticals? Do you see, or that's one potential in the divide between horizontal and vertical? That's been a
Yeah.
wall, but maybe that'll come down. Another one might be all of the work that's going to be disrupted with or replaced by AI. Transcription used to be a service, and now it's a software. And we could see this in legal services and the rest. There's a huge TAM to that. It's a lot of value coming
Yeah.
there. And then they could come around, as you said, integrate and surround. Do you think there's going to be some seismic shifts in the whatever for 10 years or so, vertical and horizontal SaaS have been kind of chugging along in their swim lanes?
Yeah. I think you've outlined two potential dynamics, and let me treat them separately. The latter dynamic which you're describing, which is more and more of these jobs to be done will be automated away
Yeah.
versus being done by people. I think in certain circumstances that will happen. These are
Yeah.
jobs that people don't want to do.
Yeah.
You know what I mean? There's certain, whether it's because the business unit isn't that profitable, and this is where the junior woodchucks get trained, and that's not strategic. Whether it's outsourced anyways, right?
Yeah.
Your customers are using third parties to do it. I think that augmentation, that essentially rather than staff augmentation, you're using AI augmentation in certain pockets that will grow and they'll be very effective. And similar to robotic process automation, I think a lot of overseas companies may actually use AI tools to increase their margins and deliver better service. Now you got to be really careful where if that service is really important, you can start to eat away at the software. So the other way of saying it is, hey, if you're making a bunch of money on the services, well, you can start to offer the software for free. Um,
Yeah. Yeah.
and I think that's a real pressure. That
Mhm.
now that a typical approach hasn't always worked because if it's free, then people don't really invest in it. It's not that great. And if that software is really important, then people will
Mhm.
go pay, I don't know, that $200 a month for software that works. But that is a threat. So I think that's certainly the case. Now, the second thing you're talking about is horizontals becoming more verticalized. I think that's probably true. I think it's a little bit of a race, right?
Mhm.
And this gets back to the kind of control point incumbents versus the native AI companies. That's a race, right? Can you
Mhm.
use the infrastructure tools as an incumbent to build a great product and head the native folks off the pass? You can, but you got to go do it. You got to run the race. You got to win the
Yeah.
race. Some of the horizontal and verticals. I think the dynamics of the race are twofold. One is I do think generative AI helps you customize your UI maybe your workflow, although I think that's less clear to me right now, but that may change over time to become more verticalized, right? And so
Hmm.
that really helps. On the flip side, if you're a vertical SaaS company that has, a pretty good chunk of the industry, you have incredible data, right? And,
Yeah.
and you can not only provide a customized UI and workflow based on language, but also data and sometimes transactional data. And so if again, if you have the proper skills, if you have the proper resourcing, if you haven't slept on AI, then actually all these generative AI technologies can actually help you separate from your horizontal competitors. So it's
Yeah.
it's yeah, all right. It's very similar.
The kinds of companies you're tracking and the potential big gorillas, category killers in verticals that you invest in, are they the platforms that are going to potentially acquire the non-control point add-ons and players in these verticals? Several of the founders I know in my groups and otherwise say someday we're going to be bought by a company like Toast of their industry,
Yeah,
something like that. Do you use that kind of platform add-on kind of thing? And is there a build versus buy
yeah.
game going on up there?
Well, two things. There's a lot in that question because you've always asked great questions. Look, we oftentimes invest in companies that are doing 5, 6, 7 million ARR, right? It's
Yeah,
not These aren't big companies, but by the nature of their products, the fact that they're a control point, they actually are natural platforms where
right.
there's third-party add-ons. So I'm
Yeah.
involved in one company where they aren't necessarily the biggest company in the space, but these point applications are looking to merge with them, and these
Uh,
point applications are sometimes twice their size. But because they have this workflow gravity, they have this data gravity, right? And so,
hmm.
so as other nice feature of our model is if we pick the right control point as these companies scale, they are the natural buyers of point solutions. But that's not to say we're investing in the biggest companies. We do invest in big companies, but
Yeah, yeah.
we invest in small companies that become big as well. I think that is fundamental to our thesis is that you control your destiny. You don't have to sell to the platform. You can be the platform. And I really encourage every founder, whether they take money or not, to try and build into that optionality because you're going to make more money that way. You can control your
Yeah,
destiny.
yeah.
I think the build versus buy is a rich topic that it's both tools
You kind
are
of slid that in there, right? It's not a
yeah
simple one. It's not as easy as simple
yeah
saying that.
that's podcast number two. Yeah,
Yeah, yeah.
yeah. There's a bunch of trade offs there.
Yeah. Because if you look at some of the bigger companies, they started with the one thing and now they've got 25 things they can upsell and they're bundling and some are services and some are payments and some are sales and marketing tools and the menu has grown and you can make software very quickly these days if you know what you're doing. So the all-in-one, theory is back and expanding because it's relatively easy on top of a platform to, build something else out compared to 10 years ago for the same reasons that practical founders can get into market quickly with great products. Do big companies, hesitate when buying a smaller company to tuck them in, whether it's, I don't know. Yeah, one of the next add-ons out there to it's not like private equity where they go look at the menu and they go shopping, right,
Yeah,
and start acquiring and piling them in. There's a different all-in-one strategy when you're the core system and you're very
yeah.
sensitive about it.
Yeah, I think that's right, Greg. I think on the margin it does help you build versus buy, but nonetheless, I do think there's been waves of automation, right? There's been waves of development automation that have made building products easier and easier over time. That being said, it's focus. It's great product managers focusing on their customer needs, great go-to-market executives on the marketing and sales side, really driving distribution. And oftentimes at big companies, that 25th product is not going to get the attention. They're not
You
going to get the
think?
best people. They're not going to be able
Yeah.
to, like even with the best
The
AI,
best people are not going to be on it, right? Yeah.
your practical founders are going to run circles around them. And so if they
Yeah.
really want to make a splash, if they really want to win, they got to go buy that team and
Yeah.
their great products and their great distribution.
Ah,
So I think it does on the margin, but I don't think it changes the equation in my opinion. I might be wrong,
yeah.
but I'm pretty certain that.
Well, Dave, what are you seeing that practical vertical SaaS founders, North America and Europe, Australia, New Zealand, are not seeing, or that you're starting to see is tipped. You're right in the middle of this community and
Yeah.
right inside all of these companies. What are some of the big, the last thing here is like a fair warning. This is coming. It may be AI and maybe something else. If we're trying to keep track of these tectonic shifts.
I'll give two things. I'll give a threat and an opportunity. Just a
Okay.
nice balance, right? Do not sleep on AI. You can wave it off. You can view it as a toy. You can view it as, hey, no one's
Yeah.
going to trust that outcome. No one's going to trust using it. Man, things are changing really quickly. Lots of smart people are making it better, and you have a massive opportunity to make it better with your data and your workflow.
Yeah.
Jump into it. Control your destiny. Don't get caught sleeping. On the flip side, the thing that's really cool to me, and this may apply to some of your founders, in these less digital industries, similar to what I described in geos that haven't seen a lot of software adoption, you can do more. We just invested in a deal that I'll announce later this afternoon, actually, where it's an industry where there's very little software, and they're the Apple of the industry. They sell incredibly well to a certain end constituent. Other stakeholders, like they sell to the retailers, other stakeholders, distributors, OEMs are screaming for them to build software for them
Wow.
to build workflow automation. Because in these industries, different parts of the value chain have to work together. Similar to the thing I described, the
The
CCC.
reason why it hasn't cracked so far, so far.
And so, man, that's a big opportunity. And that doesn't require a ton of venture dollars. It may require some, but it doesn't
Hmm.
require a ton. It's a big opportunity. And I think entrepreneurs, founders, and investors are only opening their eyes to some of the new TAM you can create and some of the new great sort of fully industry solutions you can provide to multiple stakeholders. And so I think that's a really big opportunity.
Awesome. Thanks for sharing that. Thanks for all you do for vertical SaaS founders out there. You're the sole investor that's really building a community to bring the groups together and the VSaaS Collective live and do your benchmarking study, which I encourage founders to participate in and get the feedback. Benchmarking is such a problem for vertical SaaS founders. We go through this kind of thing it just depends, right? What is your ARPU? What's your payback period? And all of the rest of that. It depends on your market, in your situation, your phase of growth, and so forth. And your benchmarking study for vertical SaaS founders provides a lot of insight for there. So I'll have links to that. I'll have links to your vertical SaaS knowledge projects and your VSaaS Collective live event. I'll be there. I don't know if I'll be speaking this year, but I'll be there, and I'm bringing a gang of my practical founders from my peer groups to the event because it was so useful in San Francisco. Anything else you want to make sure people know about?
Yeah, I just really encourage you to take this opportunity as a community. And we're trying to build a community of the best of the best. And the best of the best, some have taken money, some haven't, right?
Yeah.
And I think we all can learn from practical founders. And we'd love for you to be part of the benchmarking study. We'd love to be part of Collective Live and our community events because I hope you can learn from some of the folks that are there. We can certainly learn from you. And that's what we're trying to do. We're a growth equity firm. We're looking to make investments, but ultimately we're trying to build a community of great entrepreneurs. So love to have you.
Okay. Start there and really appreciate it. Thanks for all the help you offer to practical vertical SaaS founders out there, Dave.
Thanks for all your support, Greg. Great
Thanks.
chatting.
Thanks for watching this week's founder interview on the Practical Founders podcast. Be sure to hit like and then subscribe to my Practical Founders YouTube channel to keep up with my weekly videos for serious software founders who are building valuable companies without big funding. Check out my blog and information about my Practical Founders CEO peer groups at practicalfounders.com. And follow me on LinkedIn to keep the conversation going. See you next week.